Hey guys, welcome back to another video of JB&D's Market Stance, where we're sipping out the market for some golden nuggets. Hey, man, god damn, I recorded this episode like several times already, and it's not one thing, it's another. So we're gonna do this again. I'm so sorry. Well, I'm so sorry to myself because this is your first time watching this. I'm gonna try to make this as fast as possible because I'm getting irritated having to record this over and over again. Look, we're gonna talk about an accord that might be being worked on behind the scenes. That's my suspicion. Something along the lines of the Mar-a-Lago Accord, trying to bring the trade deficits down, which is what Trump has been doing. That weakens the dollar, amongst other things. Weakens other currencies. We're gonna go deep into it as quickly as possible. This paper I wrote back in April as a checklist, so that I could look at it to see if an accord is being worked on, in my opinion. And I had 9 different signals. 6 of them were green, 2 red, 1 yellow, something along those lines. But since then, out of those 9 signals, 8 of them are green now and 1 is yellow. But we're just gonna go over it and yeah, okay. Okay, so amongst apart from that, he also wants from this supposed accord, he would like these foreign countries, other countries to buy very, very long term U.S. treasuries, very, very long term, and in return, he would offer them protection, security, national, military protection. Okay, in the proposed Mar-a-Lago Accord, there was something about like 100 year U.S. treasuries. Um, I don't know about that, but point is, he would want these countries to buy very, very long U.S. treasuries and offer them protection. Look, I don't know if you've noticed, but a few days ago, Trump announced that he's going to create this peace board, and he wants, if a leader from another country wants to join the peace board, he or she has to pay Trump 1 billion, or I don't know how many billions of dollars, just to enter. Okay, what is he gonna do with that money? I don't know. He might use it for his own personal benefit, or he can redirect that money into U.S. Treasuries, or that's just an entry, and then once they're in, they officially announce an accord, and more money goes into U.S. Treasuries somehow, some way. I don't know. It's just speculation. I find it very suspicious that he wants these leaders to pay up money just to enter this peace board. Okay, let's just go over the steps. Okay, the signals. Originally, I had written that that the hold on. Yeah, but originally I had written that the Japanese yen was strengthening against the dollar, but since then, the Japanese yen has weakened against the dollar. But however, other currencies have been strengthening against the dollar, which is my second point. Other currencies are rising. Okay, first signal was green, then it turned red, but now it's yellow because we've had official messaging of potential intervention with Japan-U.S. agreement. Okay, second signal green. Why? Because these other currencies are rising, climbing, while the US dollar weakens. Third signal, Chinese currency strength. Now, before it was weak, there was weakness. It was a yellow signal. Now it's green. Um, so yeah, we got the Chinese currency with some strength now. We have indirect bidders strong at auctions. Back then they were strong and they still are strong. Uh, Indirect bidders connect as a signal to foreign demand for U.S. Treasuries, and foreign demand for 10-year yields at auctions remains healthy, and for 30 yields, foreign demand still strong. Okay, yields were rising back then, and bonds were dumping. However, since then, yields have topped out and bonds have stabilized. So it was a yellow signal then. Now it's a green signal. We've just got stabilization. Okay, I say that because, well, you'll see. Okay, the US dollar weakening while yields rise. Okay, sideways since then. Okay, um, this happened yesterday again. Today's January 21st, Wednesday. This happened Tuesday, yesterday, when yields were rising and US dollar was weakening. I think it had to do with the Greenland, Trump, tariffs. I don't know. I think, but yeah, it just signals stealth FX coordination. But big picture, it's been sideways since then. Another signal I had written was that gold was rising and equities were flat. However, since then, both are rising, but gold has been dramatically outperforming equities. So, still a green signal. Capital rotating defensively, smart money positioning. Next signal was official messaging slash media trial balloons. We didn't have that yet. It was still quiet, no leaks, red signal. However, since then, we've just a few days ago we had the Japan finance chief confirms intervention considered in U.S. Japan agreement. We also had Japan's finance minister and U.S. Treasury Secretary Scott Bessent shared concerns about the weakening yen during a bilateral meeting as the currency edged toward a key threshold where authorities have intervened in the past. So now this turns into a green signal. I need to check if there have been other similar comments on other currencies, but recent Japan U.S. messaging is noteworthy. Today we had, I think it was finance minister of Norway announced that they will not be selling the U.S. Treasuries after there was a headline that a Danish sovereign wealth fund was going to sell the U.S. Treasuries, something along those lines. I suggest you fact check it. But I think it's good that we've also had another country. Um, doesn't have to do with the currency, but it has to do with U.S. Treasuries say that they're not selling U.S. currency. I mean U.S. Treasuries. But emphasis more on Japan because I think this whole accord coordination could be one component to the Japanese yen reverse carry trade that we're trying to play over here at JBND's LEC. Um, but yeah, again, nothing is financial advice, opinion only. We had forced liquidations, hedge funds unwinds. That was back in March and April. That already happened, and yeah, that's green. So we had bonds dumping, and then we had foreign buyers swoop in, save the day, suggested by indirect bidders. Very strong then and very strong now, which suggests that bond dump wasn't all due to foreign countries selling, if any, because back then in the media, people were thinking and panicking that, oh my god, foreign countries are selling U.S. treasuries because of Trump. Da, 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 da. Right. The data that I was looking at suggests otherwise. So yeah, 6 green signals, 2 yellow, 1 red. To now 8 green signals and 1 yellow. Very, very strong of a backdoor accord probability, in my opinion. My opinion. Phase 1, quiet signals appear where the US dollar falls despite rising US yields. Hedge fund, bond liquidations, foreign buyers observing auctions, and yen and other currencies rallying. Other currencies are rallying except the yen. Foreign buyers are absorbing options. Hedge funds already got liquidated back in April. US dollar did fall despite rising US yields. Phase 2, market stabilization. I think that's where we're at right now. Yields topped out the TLT basis amongst other bonds. The US dollar continues lower. However, the US dollar since then has been pretty much sideways. I think later in June it did make another low, but since then, big picture, it's been sideways since April to now. I think we're getting subtle media shifts. I think we are nearing the end of phase 2 to now go into phase 3 soon, where maybe it could be where like the Fed, and or the Bank of Japan and or the European Central Bank hint at coordination, and the U.S. dollar declines even more, and it becomes accepted, and we get capital rotation underway. Because right now it was just like Scott Bessent and Japan's finance minister and another member of Japan come out to say that they would consider an intervention in the currency with the U.S. Japan agreement, right? But we haven't gotten something official from like the entity whole of Bank of Japan or the Fed or the U.S. Fed or the European Central Bank. But yeah, and then phase 4 would just be repricing, or maybe we get a rally in bonds, further U.S. dollar weakening, and equities joining on the weakness of the dollar, and hopefully that would just be like U.S. big tech, things like that, while we get strength in emerging market equities and China and just international. We just see that diversification go out from America first to international equities. Very short timeline. We can skip over that. That was back then. So right here I wrote why USD slash JPY falling and US yields rising do not necessarily mean Japan is selling bonds. So normally when US yields go up, you see the dollar strengthen and the yen weaken. Sorry, because investors move money into dollars to earn better returns. But in this case, US yields are rising fast and the yen is strengthening. That was back then, okay? Theory one, which the first theory, which was circulating online, uh, without a panic, was that there was foreign countries selling on their U.S. treasuries, and where then Japan uses the cash to buy the Japanese yen and strengthen its currency. But the problem back then that I noted was that Japan or other countries were dumping, if they were dumping their U.S. treasuries, we wouldn't be seeing strong foreign demand at bond auctions. Instead, foreign buyers have actually been strong, which suggests they're not selling. I think the only country that was really significantly selling was China since then. Um, Theory two, which I thought was more likely, which was not circulating online, was that they were buying U.S. treasuries and intervening in their currencies. So they were quietly buying U.S. bonds, which might be slowing the rising yields. I think if we didn't get that strong foreign demand, indirect bidders at auctions back in March, April, the bond of the sell off of U.S. bonds would have been much worse. But as suggested by indirect bidding, foreign demand came in, saved the day back during that sell off. At the same time, they are likely selling US dollars and buying their own currency in an effort to prop up the currency. This fits what we're seeing. I know that that's what we were seeing with the Japanese yen at that moment, but since then it has changed. But we are seeing it with other currencies such as the euro, Mexican peso, Swiss currency, Australian dollar, etc., Canadian currency. Foreign demand is still strong for U.S. bonds. Um, yeah, yields were rising, but that was probably due to the hedge funds blowing up back then. But yeah, again, I know that U.S. yields have been pretty much sideways since then. This behavior suggests Japan, amongst other countries, aren't panicking, but it's coordination. Um, so just quiet teamwork going on behind the scenes. Here's a note on China. However, if you read both of them, um, some things seem seem to have been happening on one, and then some things that don't seem to have been happening on the other. Same thing here. So um, honestly, look, I'm not gonna read it. If I'm being honest, I don't know what's going on with China and the U.S. in terms of an accord. I can't get a clear signal if China is part of the accord or if they're not, or if, yeah, I don't know. I do not know. But we've gotten very strong messaging from the Japan Finance Minister and U.S. Treasury Secretary Scott Bessent, hinting at intervention in the Japanese yen, which makes me think that Japan will most likely be part of an accord. And again, I think this is going to be one component of the Japanese yen reverse carry trade that I'm trying to play over at JBND LLC. But we made a whole video about the Japanese yen where we go over a bunch of other things. This is just one component, in my opinion, but it's a very, very positive signal. It could play a vital role. But yeah, not financial advice. Here were some trade ideas that I wrote at the day that I wrote this paper, and I tracked the percentage gain from then to now. 3 days ago, when I updated this paper. Long 10-year U.S. bonds TLT 4.5%, Alibaba 56%, Estee Lauder 111%, Canada Goose 67%, Albemarle 190%, GXO 65%. And then here I wrote the catalyst for each and the risk for each. So basically for all of them except for the TLT and GXO, their catalysts were a weaker U.S. dollar and the only risk was, or not the only risk, but a major risk was a weaker Chinese currency. However, we never got that weaker Chinese currency, and yeah, you could just pause it and read more in detail. So this is the, again, I can't stress enough the importance of being prepared, so that at times of panic you respond and you don't react. Okay. Did I already mention this? At the beginning of the video, I mentioned that Trump would like these in such an accord. Trump would. It's been suggested that, or speculated that Trump would like these foreign countries to buy a lot of very, very long-term U.S. treasuries, right? And then he made this peace board recently, or he's making this peace board that he announced recently, where he wants these leaders of whichever country that wants to join to pay up like $1 billion or a few $1 billion just to enter. I wonder what he's gonna do with that money, if he's gonna use it for his personal benefit, or if he would redirect that money into U.S. treasuries, or if once they enter, maybe then they organize something even bigger and announce an accord. I don't know. I think it's very suspicious. Something we must keep an eye on. I think it has potential of leading to official messaging and of accord. This Trump peace board. So really, really keep an eye on that. Again, I think we're on phase 2, maybe starting to go to phase 3 sooner rather than later. And yeah, so disclosure: the contents of this paper and this podcast are for informational and educational purposes only and should not be construed as investment advice or recommendation to buy or sell any financial instruments. This research is purely speculative in nature and reflects the author's personal opinions and interpretations, which are subject to change at any time without notice. The information presented may not be accurate, complete, or current. The author is not a registered investment advisor, broker-dealer, or licensed financial professional. Any financial decisions made based on this content are made at the reader's own risk. Always conduct your own due diligence and consult with the qualified financial advisor before making any investment decisions. Okay, not financial advice, opinion only. And yeah, I try to go through this as fast as possible. Yeah, guys, there's not much more to be said. I hope that was very clear, and thank you guys for watching. I'll see you guys for the next episode. We have a lot of data to go over, so I hope it'll be maybe tomorrow or 2 days from now. But yeah, there you guys.